Welcome back, everybody, for another deep dive. This time, we're going to be looking at Sterlite Technologies Ltd.
STL?
STL, that's right.
Yeah.
And we're going to be looking at some of their recent activities as they are trying to position themselves to be a global leader in the world of optical and digital solutions.
Right.
So to do this, we have three press releases issued by STL, all on January 17th of 2025, just a couple days ago.
Okay.
We also have an investor's presentation on financial results, and this contains detailed information about STL's various businesses, their financials, and their future plans.
Sounds good.
We've also got STL's unaudited, consolidated, and standalone financial results for the quarter and 9 months ended December 31st, 2024. And last but not least, to make sure we know these numbers are real, we've got the limited review reports on the unaudited, consolidated, and standalone financial results from Price Waterhouse Chartered Accountants, LLP.
That's a mouthful.
It is a mouthful, and we are going to try to distill all of that into some key takeaways for you today. In particular, we're going to unpack STL's performance in Q3 of fiscal year 25, as well as look at their strategic priorities.
Right.
And I think we're going to find some interesting insights into their commitment to sustainability and social responsibility as well.
I'm curious to see what they've been up to.
Let's jump right in.
Yeah.
So first off, STL is shaking things up in the leadership department.
Oh.
You've announced two major appointments, both effective February 1st, and I think these choices are very telling.
Leadership changes can definitely be a sign of where a company is headed.
Exactly. So Pankaj Malik is stepping in as interim chief executive officer for their global services business.
Okay.
And this is not some newbie they are bringing in. He's got a whopping 27 years of experience, with 20 of those years specifically in the telecom sector.
Wow.
He's known for his expertise in strategic operations and digital transformations.
That seems pretty relevant right now with the telecom industry undergoing such massive changes.
Definitely. You know, with the rollout of 5G and the increasing demand for high-speed connectivity, this is a really critical time for the industry.
Yeah, and STL is clearly signaling they want to be at the forefront of those changes.
Exactly. Not just reacting, but actually driving the digital revolution.
Makes sense.
And their second appointment, I think, reinforces that message. They've brought on Mrinal Aswadekar as their new company secretary and compliance officer.
Okay. Compliance may not sound as exciting as digital transformation, but it's definitely important.
Absolutely.
Yeah.
Especially for a company with global ambitions like STL. You know, good corporate governance is essential for building trust with investors and ensuring long-term stability.
It's the foundation for sustainable growth.
Right. And Aswadekar, she brings some serious credentials to the table. She's been with STL for over a decade, so she understands the company inside and out.
Right.
And her expertise in areas like employee stock ownership plans, M&A transactions, and building robust compliance frameworks, it speaks volumes about her ability to navigate the complexities of a global business.
It seems like STL is putting a strong emphasis on both operational efficiency and corporate governance with these two new appointments.
Yeah, and I think it shows they're really serious about laying the groundwork for sustainable growth, which is really important in such a rapidly evolving industry.
So they've got the right people in place now. How are they actually performing?
Yeah, that's the big question, right?
Yeah.
So let's dive into their Q3 results for fiscal year 2025.
Okay.
Keep in mind that the global economy has been facing some headwinds. You know, there's been a lot of talk about slowing growth and uncertainty in various sectors.
Yeah, for sure.
But despite all that, STL has demonstrated, I think, some pretty remarkable resilience.
Really?
Yeah, their revenue for Q3 came in at 1,261 crore.
Okay, and how does that compare to previous quarters?
Well, it is down a bit, but considering the global economic situation, it's a pretty solid performance in my opinion.
Okay.
But what's even more impressive to me is their open order book.
Oh, right, the open order book.
It currently stands at a staggering 9,050 crore.
Wow. Now, for our listeners who might not be familiar with the term open order book, could you explain what that is?
Yeah, so basically it represents the value of confirmed customer orders that STL has not yet delivered and converted into revenue.
Ah, so it's like a pipeline of future revenue.
Exactly.
Yeah.
And it gives us a glimpse into, you know, the strength of their customer relationships and their growth potential going forward.
So that's a really positive sign then.
Very positive. But it's not just about revenue, right? It's also about profitability.
Of course, you got to make sure you're making money.
And here, too, STL has delivered some good news.
Oh.
Yeah, their EBITDA margins have actually improved year on year.
So they're becoming more efficient.
Exactly. They're managing to do more with less,
Hmm.
which is the sign of a well-run company in my book.
What's interesting is they achieved this despite lower optical fiber cable volumes in recent quarters.
Yeah, it shows they're adapting to changing market conditions and finding ways to maintain profitability.
So they're good stewards of their resources.
Yeah, I think so. Okay, so we've seen they've got the right leadership in place and their financials looking pretty good.
So far, so good.
Now, let's shift gears and look at how they're strategically positioning themselves for future growth.
Oh, okay.
STL operates across three main business units: Optical Networking Global Services and STL Digital.
Right.
And each of these units has a specific focus for fiscal year 2025.
Yeah.
And I'm really intrigued by the direction they're taking.
Me too. Let's break it down.
All right, let's start with their optical networking business.
Yeah.
This is their bread and butter, right?
Yeah, it makes sense.
And they've reported a solid 8% year-on-year increase in revenue, driven by diverse customer wins across the globe.
8% is pretty good.
Yeah, especially in this economic climate.
So how are they achieving that growth?
Well, they've got a really impressive global footprint with 10 manufacturing plants strategically located across 4 continents.
Wow, that's a lot of plants.
It is, and it gives them a real competitive edge. It allows them to cater to demand wherever it arises.
Oh, so they can tap into emerging markets as they come online.
Exactly. They're not limited to just one region. They can go where the growth is.
That's smart.
And speaking of expansion, STL is also making some bold moves within their optical networking business, particularly in India.
Oh, yeah. India's a huge market with a lot of potential.
Huge potential.
Yeah.
And they're playing a key role in the government's FTTx initiative.
FTTx. Can you remind our listeners about that?
Sure. So FTTx is a massive undertaking aimed at bringing broadband connectivity to every corner of rural India. It's a huge infrastructure project.
Wow. What's STL's role in that?
Well, they just snagged a huge EE contract for the Jammu and Kashmir package, valued at approximately 2,600 crore.
That's massive.
It is. It not only shows their ability to execute large-scale infrastructure projects, but it also positions them as a key player in a market that's poised for just explosive growth in the coming years.
I see. So they're thinking long term.
Definitely. And it's not just about laying down cables. STL is also diving deep into new product development.
Oh, now that's where it gets really interesting.
This is where they're pushing the boundaries of what's possible with fiber optic technology.
Give us some examples.
Okay, well, for one, they're developing an AI-led data center portfolio. Now, AI-powered data centers, those are a big deal.
I've been hearing a lot about those.
Right. And STL's betting on this trend in a major way. As AI becomes more prevalent, the demand for these data centers is expected to just skyrocket.
It makes sense.
And they're developing solutions that are specifically tailored to meet those unique needs.
So they're not just keeping pace, they're anticipating where the market is headed.
Right. They're trying to stay ahead of the curve.
Yeah.
And their innovation doesn't stop there. They're also developing cutting-edge solutions like fiber optic sensing, or FOS.
What is that exactly?
So FOS leverages embedded NVIDIA Edge AI to provide real-time monitoring and insights for all sorts of applications, including infrastructure, health security, and environmental monitoring.
Wow. So they're using AI to enhance their core offerings and open up new possibilities.
Exactly. And then there's their work on multi-core fiber, or MCF, for quantum computing.
Now, quantum computing is still in its early stages, but it has the potential to revolutionize so many industries.
Oh, absolutely. And STL is already laying the groundwork for this future by developing the optical infrastructure that will be needed to support this incredibly powerful technology.
So they're looking way ahead.
They are.
Yeah.
They're not just thinking about the next few years. They're looking a decade or more into the future.
That's impressive.
I think so, too. So from large-scale infrastructure projects to cutting-edge innovations, STL's optical networking business is really firing on all cylinders.
It sounds like it.
But that's just one part of their story. Let's move on to their global services business, which also has some exciting developments.
Now, this is where things get a little bit more complex, but also quite interesting from a strategic perspective. STL is actually in the process of spinning off their global services business into a separate publicly traded company.
Oh, wow. So they're essentially splitting up their business.
Yeah.
Why would they do that?
Well, there are a few reasons. First, it allows each business to focus on its own specific goals and strategies. The global services business is all about deploying networks and providing integration services, while the rest of STL is more focused on manufacturing and developing optical solutions. So by separating them, they can each tailor their operations and investments to better serve their distinct markets.
So it's like each gets to run its own race at its own pace without having to worry about the other one.
Exactly. And it can also make them more attractive to investors. Some investors might be specifically interested in the growth potential of network deployment services in emerging markets, while others might be more drawn to STL's expertise in optical technology and innovation. So, by creating two separate companies, they can appeal to a wider range of investors.
It's a clever way to unlock value and create more opportunities for growth,
Right.
but it's also a complex process, right? What steps have they taken so far?
They've actually been working on this for a while now. They've received all the necessary approvals from their board shareholders and creditors. They've also filed the necessary documents with the National Company Law Tribunal, or NCLT, which is the regulatory body that oversees these types of corporate actions in India.
So they're in the home stretch.
Pretty much. They're just waiting for the final approval from the NCLT, which is expected to come through soon. Once they have that, they'll be able to move forward with allotting shares of the newly demerged company to their existing shareholders, and then listing the new entity on the stock exchanges. The expected completion timeline is Q1 of fiscal year 2026.
Okay, so we should be hearing more about this in the coming months as the demerger process moves forward.
Definitely.
But let's not forget about their third business unit, STL Digital. This is the newest kid on the block, and they're already making waves.
They're definitely one to watch. STL Digital is all about helping businesses transform digitally. They provide a range of services from cloud migration and data analytics to cybersecurity and Internet of Things solutions.
And they just achieved a significant milestone. They hit EBIT to break even.
That's great.
Now, I know that sounds like financial jargon, but basically it means they're now generating enough earnings to cover their operating expenses.
So they're on the path to sustainable profitability.
Right. And they're not just talking the talk, they're walking the walk. They've already executed some impressive projects, including a major digital transformation initiative for Vedanta, a global natural resources company.
I think I read about that.
Yeah.
Didn't they migrate like 8 of Vedanta's business units to a unified SAP cloud platform?
They did, and they did it in record time. The entire project was completed in just 6.5 months, which is incredibly fast for such a complex undertaking.
That's impressive.
Yeah, it really shows their agility, their technical expertise, and their ability to deliver, tangible results for their clients.
So STL Digital is a force to be reckoned with.
I think so. They're tapping into the rapidly growing demand for digital transformation services, and they've got the track record to prove they can deliver.
For sure.
Okay, so we've talked a lot about their strategic initiatives and their performance.
Yeah.
But there's another aspect of STL that really stood out to me in these documents. Their commitment to social responsibility and sustainability.
It's always nice to see a company that's not just focused on profits, but also on making a positive impact.
Absolutely. And they have a really multifaceted approach addressing everything from healthcare and education to environmental sustainability.
Oh, like what?
Well, for example, they have a program called Swasthya Suraksha,
Okay.
which is a hybrid healthcare initiative that's reached over 26 lakh people across various districts.
That's amazing.
It is. And they're not just providing healthcare services, they're also empowering women through their Jiwan Jyoti program.
I haven't heard of that one.
So this program provides vocational skills training to underprivileged women.
Oh.
Over 5,100 women have already benefited from this program, gaining valuable skills that enable them to support themselves and their families.
That's fantastic. So they're really investing in the community.
They are. And they're not neglecting their environmental footprint either. They've installed over 4,500 kilowatts of solar panels across their facilities, reducing their reliance on fossil fuels and lowering their carbon emissions.
So they're walking the walk when it comes to sustainability.
Yep. And they've set an ambitious goal to achieve net zero emissions by 2030.
That's a bold target.
It is. But it shows their commitment to sustainability and their willingness to be a leader in this space.
I'm impressed.
Me too.
Oh.
Okay, so we've explored their leadership changes, their financial performance, their strategic priorities for each business unit, and their impressive social responsibility initiatives. I think we're starting to get a really good feel for STL as a company.
Yeah, me too. They're clearly a company with a lot of moving parts, but there's a clear sense of purpose and direction in everything they do.
All right, you ready to dive into some numbers?
Bring on the financials.
Okay, let's start with the geographical distribution of their revenue. The Americas take the lion's share, followed by Europe.
And that makes sense given their global expansion strategy.
Right? They're tapping into high-growth markets.
Mm-hmm.
And when we look at their order book composition, a significant portion comes from their optical networking business, primarily from telecom customers.
That highlights their strong position in the global telecom infrastructure market, which is only going to continue growing with the rollout of 5G.
Exactly.
Yeah.
Okay, so zooming in on their consolidated financial performance for Q3 of fiscal year 2025, their total revenue for the quarter came in at 1,261 crore, bringing their year-to-date revenue to 3,892 crore.
Okay.
Now, it's worth noting that their revenue is slightly lower compared to the previous quarter, primarily due to those reduced optical fiber cable volumes we talked about earlier.
Right.
However, they've managed to maintain a healthy EBITDA margin of 10.5% for the quarter and 9.7% year-to-date.
So despite some challenges, they're still generating solid profits.
They are. What about their profitability in terms of net income?
They reported a P2 profit after tax loss of 23 crore for Q3. Yeah, but it's important to look at the context. This loss is actually narrowing compared to the same period last year, and their year-to-date PAT loss stands at 83 crore.
Okay, so it's not as bad as it sounds.
Right. They've clearly stated in their investor presentation that they're focused on maintaining operating profitability and reducing their debt. So I wouldn't be too concerned about this loss at this stage.
So they seem to have a solid plan in place.
They do.
Yeah.
What about their debt levels? Are those manageable?
Good question. Their financial highlights indicate that their net debt stands at 2,195 crore at the end of the 9 months of FY25, with a debt-to-equity ratio of 0.75.
Okay, so those are important metrics to watch as they continue to invest in growth.
Definitely. It's a balancing act, but it sounds like they're on top of it.
Okay, good.
Now, I always find it helpful to break down the performance of each business unit.
Oh, yeah. It gives you a much clearer picture of where the strengths and weaknesses lie.
Exactly. So the consolidated financial results provide a detailed segment-wise breakdown. Let's start with their largest revenue generator, the optical networking business. They achieved a revenue of 924 crore in Q3, with an impressive EBITDA margin of 12.9%.
Now, that's a significant jump in margin compared to the same period last year when it was 12.2%.
Right, so despite the lower volumes, they're becoming more efficient in their operations.
And they've managed to maintain a solid 12.3% EBITDA margin for this business unit for the first 9 months of FY25.
Now moving on to the global services business. They recorded revenue of 289 crore in Q3. Their revenue has fluctuated over the past few quarters.
Yeah.
But what's encouraging is that their focus on securing profitable contracts is reflected in their improving EBITDA margins.
How much have they improved?
Their Q3 EBITDA margin is 6.8%, up from 5.4% in the same quarter last year.
Okay, so a noticeable improvement.
It's a positive sign that their strategic adjustments are starting to pay off.
Good for them. And finally, let's take a look at STL Digital. They hit a major milestone this quarter, turning EBITDA positive for the first time.
Isn't that great? Their revenue for the quarter was 77 crore, and their EBITDA came in at 4 crore.
So their efforts to grow this business while maintaining a focus on profitability are really gaining traction.
Yeah, and they're projecting strong growth in the coming years, fueled by their robust order book, which currently stands at 933 crore for digital and technology solutions.
Wow, and their expanding customer base.
Right. Okay, before we move on, I want to highlight something that's often overlooked when analyzing financial statements: the notes.
Notes. You mean like the fine print?
Yeah, they might seem like fine print, but they can actually provide some really valuable insights.
What kind of insights?
Well, they often contain details about significant events, legal matters, and risk factors that could impact a company's business. It's where you find the juicy details.
Oh, okay, I see.
And in STL's case, there's a note about a legal case involving their U.S. subsidiary, Sterlite Technologies Inc.
What's that about?
It relates to allegations of violating non-compete and confidentiality agreements.
Oh.
And the jury actually awarded a substantial sum against STL's subsidiary. However, STL is pursuing legal remedies, including an appeal. It's a reminder that even companies operating in seemingly stable industries can face, unexpected legal challenges.
Definitely something to keep in mind.
Right. It's a good reminder to always read beyond the headlines and really delve into the details, especially when you're assessing a company's financial performance and their future prospects.
Don't just skim the surface.
Exactly. Speaking of getting the full picture, we've talked about the global services demerger.
Right.
But I think it's worth revisiting their progress and what they've accomplished so far.
Okay, yeah, let's do that.
They provided a nice visual timeline in their presentation outlining the key milestones.
I like when they do that. It makes it easier to follow.
Right, so they've been very methodical in their approach. They received Board and Audit Committee approval for the demerger back in May 2023. By September 2023, They had completed their stock exchange filings and obtained in-principle approvals.
Okay, so they laid the groundwork carefully.
They did.
Yeah.
And by July 2024, they had filed the necessary documents with the NCLT and obtained approval from their shareholders and creditors.
So they have the support of their stakeholders.
Exactly. Right now, they're just awaiting that final NCLT approval. Once that comes through, they'll proceed with filing the approved scheme with the Registrar of Companies, allotting shares of the newly demerged company to their shareholders, and then finally listing the new entity on the stock exchanges.
It's a multi-step process, but it sounds like they're on track to meet their Q1 FY 2026 completion target.
I think so too.
Good.
And this demerger is just one piece of their larger strategic puzzle.
Right.
It's all about optimizing their business structure, enhancing operational efficiency, and ultimately driving sustainable growth. And you know what else really stood out to me in their presentation? Their ambition. They want to be in the global top 3 in their industry.
Wow, that's a bold goal. What
Yeah.
will it take for them to achieve that?
Well, they're certainly aware of the competitive landscape. They mentioned companies like Prysmian Corning and Fujikura, which are all global giants in the optical fiber and cable market.
Those are some tough competitors.
They are. So how does STL plan to outmaneuver them? Well, they're betting on a few key things.
Okay.
First, they're doubling down on innovation.
Innovation, okay.
They're investing heavily in research and development, constantly pushing the boundaries of what's possible with optical technology. They're not just following trends, they're creating them.
We've seen that with their work on AI-powered data centers, fiber optic sensing, and multi-core fiber for quantum computing. They're not afraid to take risks.
And they're not just focusing on technology, they're also emphasizing their integrated solutions approach. They're not just selling cables, they're providing end-to-end solutions that meet the specific needs of their customers.
That's a smart move. It allows them to differentiate themselves from the competition and build stronger relationships with their clients.
Right. And they're also leveraging their global reach to their advantage.
Yeah, their global footprint is definitely an asset.
It allows them to be closer to their customers, understand their needs better, and respond more quickly to market changes.
And don't forget their commitment to sustainability. That's becoming increasingly important for businesses.
Absolutely. Customers and investors alike are demanding more environmentally and socially responsible practices. It's not just a nice-to-have anymore. It's a must-have.
And STL is clearly recognizing this shift. They're integrating sustainability into their operations, their products, their overall business strategy.
It gives them a competitive edge, for sure. It attracts customers who share their values and investors who are looking for companies that are making a positive impact.
It's a win-win.
So while STL's goal of being in the global top 3 is ambitious, they're not just relying on wishful thinking. They have a clear strategy. They're executing it effectively, and they're constantly adapting to the ever-changing dynamics of the market. They're playing the long game. I think so.
Good for them.
Well, we've covered a lot of ground, but I want to make sure we haven't missed any crucial insights from these documents.
Always good to double check.
Okay, I'm looking through my notes, and something's been bugging me.
What is it?
We talked about how the demerger will streamline operations and potentially unlock value. But do we have any insights into the specific benefits they anticipate?
That's a great question. Their investor presentation highlights that the demerger will allow both the global services business and the remaining STL businesses to pursue independent growth trajectories tailored to their specific market dynamics.
So it's about giving each business more freedom.
Exactly. The demerged global services business will have more flexibility to target opportunities in network deployment and system integration. Meanwhile, STL can focus on their strengths in optical networking and digital solutions, developing cutting-edge technologies and expanding their global footprint.
So it's not just about operational efficiency, it's about creating a more focused and strategic approach to growth.
Exactly. And each business can structure their leadership and management teams to best suit their specific needs.
It sounds like a win-win situation.
Yeah.
But every strategic move comes with risks. What potential downsides have they highlighted?
Well, they acknowledge that the demerger process itself could be disruptive to their operations. It's a complex undertaking, and unforeseen delays or complications are always a possibility.
And there's also the potential for increased costs associated with operating as two separate entities.
Right. Duplicating functions and resources can be expensive.
But they seem confident that the long-term benefits will outweigh the initial expenses.
They do. They believe that the enhanced focus and strategic flexibility will lead to greater profitability and shareholder value in the long run.
It'll be interesting to see how it all plays out.
Definitely.
Now I have another question that's been on my mind.
Okay.
We talked about their ambition to be in the global top 3.
Mm-hmm.
But what are the key trends shaping the optical and digital solutions space? And how is STL positioning itself to capitalize on those trends?
Well, one of the most significant trends is the just relentless demand for high-speed connectivity. This is driven by several factors: the rapid adoption of 5G, the expansion of fiber to the home networks, the explosive growth of data centers.
And STL is right in the thick of it, addressing these trends with their optical networking business, their investments in data center solutions, and their expansion into high-growth markets.
It seems like they have all their bases covered.
And they're expanding their global footprint strategically.
Right.
They have manufacturing facilities across 4 continents, allowing them to be closer to their customers and respond more effectively to regional demand.
Yeah.
Their investor presentation emphasized their focus on new market expansion, particularly in regions like North America, where demand for optical fiber is projected to surge in the coming years due to government initiatives like the BEAD program, which is investing billions of dollars in broadband infrastructure.
Wow, so they're really going after those growth opportunities.
They are, and they're not just relying on organic growth. They've made strategic acquisitions like Metallurgica Bresciana and Optitech in Italy, which have strengthened their product portfolio and expanded their manufacturing capabilities.
So it's a multi-pronged approach.
Exactly, organic growth, strategic acquisitions, and a relentless focus on innovation.
And speaking of innovation, their commitment to research and development is truly remarkable. They've consistently invested in developing new technologies, as evidenced by their impressive patent portfolio, which has now reached 740 patents.
That's a lot of patents.
It is. They're focusing on next-generation solutions like multi-core fiber and AI-driven optical networks.
And as we discussed earlier, their innovation extends beyond technology. They're leaders in sustainability, setting ambitious targets like net zero emissions and investing in renewable energy sources.
It's a holistic approach that recognizes the interconnectedness of technological advancement, environmental sustainability, and social responsibility.
And it's an approach that resonates with both investors and customers who are looking for companies that are not just profitable, but also ethical and sustainable.
Absolutely.
So while STL's goal of reaching the global top 3 is ambitious, they've clearly laid a strong foundation to achieve it.
I agree.
They're firing on all cylinders. They have a clear vision, a robust strategy, a commitment to innovation, a strong focus on customer needs, and a deep understanding of evolving market dynamics.
It's an inspiring story of a company that's not afraid to dream big and work hard to achieve its goals.
Well said. Now, we've covered a lot of ground, but I keep coming back to STL's vision of a world where everyone is connected. And it really gets me thinking about the future of data itself. We're creating more data than ever before, and the pace is only accelerating. It's mind-boggling.
I know, it's incredible, just the sheer volume of it all. Think about all the devices we use every day, the sensors, collecting information, all the social media posts, the videos we stream. It's just a constant flood of data.
And all of that data needs to be transmitted, stored, processed, and analyzed.
Yeah.
It's really putting a lot of pressure on our existing digital infrastructure.
Yeah.
And it raises a critical question: can our networks keep up?
That is the question, isn't it? And that's where companies like STL come in. They're not just providing the physical cables and hardware, they're actively developing the technologies that will shape the future of data transmission and processing.
So they're laying the foundation for a future where data flows seamlessly and effortlessly.
Exactly. A future where data enables innovation and progress in human connection on a scale we can barely imagine.
It's like they're building the highways of the future. But instead of cars, it's data speeding along these optical superhighways.
That's a great way to put it. And those highways need to be able to handle increasing traffic, not just in terms of volume, but also speed. Think about those multi-core fibers STL is developing for quantum computing. That's not just about faster internet speeds, it's about enabling entirely new paradigms of computing and data analysis.
So it's about unlocking the power of data to solve some of the world's most pressing challenges.
Exactly. Things like climate change, disease, poverty, inequality.
It really has the potential to change the world for the better.
Imagine a world where doctors can use AI-powered tools to diagnose diseases earlier and more accurately, where scientists can run complex simulations to develop life-saving drugs, where educators can personalize learning experiences for every student. That's the promise of a data-driven future, and STL is playing a crucial role in making that vision a reality.
It's exciting to think about all the possibilities, but of course, with great power comes great responsibility.
Right, as we become increasingly reliant on data, We need to be mindful of the potential risks and challenges.
Things like data privacy, security, ethical considerations, those are all paramount.
Absolutely. We need to ensure that data is used responsibly, ethically, and in a way that benefits humanity as a whole.
It's a conversation we need to be having now as we build the infrastructure for a data-driven future.